In times of trouble, investors like to reach for the dollar. It's the go-to flight to safety currency. But not this time. This time, the value of the dollar is falling, along with stocks and US Treasuries. US President Donald Trump's shifting efforts to upend the global trading system are rattling trust in the world's reserve currency. But is this a true crisis of confidence, or just a short-term bout of volatility? Let's try and find out. It's what we do here on Reuters Econ World. Every week, we pick a phrase or buzzword and go deep on the economic principles and ideas driving the biggest news around the world. So this week, the dollar. I'm your host, Carmel Crimmins, in Dublin. The dollar has been the linchpin of the global financial system since the end of the Second World War. And its dominance has endured, even as the United States' share of global economic output has halved since 1945. America's military might, the independence of the Federal Reserve, and trust in the US rule of law are all reasons why the greenback is still the closest thing to a world currency. But Trump's targeting of trading partners and his willingness to test the rule of law are spooking investors. And the dollar is taking a hit. But is this really the start of something? After all, there isn't an obvious alternative to the greenback as the global currency of choice. And the dollar has defied the doom-mongers before. To help me dig into all of this, I spoke to Dan Burns, our US economics editor and a regular guest on the show, and Dhara Ranasinghe, our financial markets editor in Europe. Hey Dhara, hey Dan, thanks for joining me.
Hi Carmel. Hi Dan.
Hey Carmel, how's it going?
It's going. I'm amazed either of you have found time to talk to me at all.
Yeah, well, don't be surprised if I hang up.
Is that a metaphor for the US, Dan? Let's get into that. I'll tell you what, I'll let you off for now. Dhara, let me start with you. I have to say, it's amazing. One of the first pods we did last year was about the strength of the dollar. I cannot believe less than a year later, this is what we're talking about. It's head spinning.
Yeah, it's incredible, especially since the dollar started the year stronger. The euro was at almost $1 in early February. Everybody was talking about parity, and now currency analysts are saying that $1.20 is not out of the realm for the euro to rise to. So we are talking about an incredible turnaround in fortunes for the dollar.
I would just, it's an interesting factoid. I've been playing with the seasonality chart while we've been talking.
Whoa! You've been playing around with charts while we've been talking, Dan?
Exactly.
That could I just say that's just a Reuters journalist multitasking right there. Look at that! Look at that! Yeah.
What could I say? I'm embarrassed. The 8% decline in the dollar, the dollar index since Trump's inauguration really does rank as the worst performance of the dollar at the start of a new presidential term, going back, as far as this particular tool will take us into the early 1970s.
Wow. And it's not just the moves, although they are huge, but it's the direction of travel, right, Dan? Like, we're not used to seeing the dollar drop in times of turmoil. We're used to seeing the dollar rise as a safe haven.
Absolutely. And that's one of the things that has been so new about this relative to previous episodes of upheaval, particularly in the observations from outside experts. Certainly, that level of concern is not there among the Trump administration, but it is there among outside observers, former officials, just saying that this is not ordinary behavior. To see evidence of the world actually shying from core U.S. assets like treasuries when the world is, financial markets are in upheaval.
So what exactly is causing this? Is it just Trump's tariff policy, the kind of the shifting sands there? Or is it something more fundamental, like questions about the US as a reliable steward of the sort of international world order?
So this is a question that we've been asking everybody. You can actually pinpoint the weakness in US markets and the dollar to that reciprocal tariff announcement. But what's worrying is that the sell-off continued even when we got some pause and more reassuring signs out of the US, which tells us there's a more worrying narrative underway of people talking quite openly about a crisis of confidence in US assets, crisis of confidence in the US dollar, which is the bastion of that. And why is that? Because we're seeing everyone that we speak to, investors, big investors, saying policymaking is erratic. And erratic policymaking means uncertainty. And when you have uncertainty, businesses cannot invest. Consumer confidence takes a hit. Business confidence takes a hit. Recession risks rise, and that ripples out. And before you know it, we're in an environment of fear and panic. And while things are a little bit calmer, that is what is playing out in global markets.
Yeah, Dan, I mean, almost all economists, right, expected the dollar to strengthen following the news of the tariffs, right? Tariffs are inflationary, but the opposite has happened, and we're also seeing a surge in treasury bond yields. I mean, that's a pattern that we typically see in emerging markets when investors lose confidence in a country's government. Is that what's going on here?
It's the big question.
Mm-hmm.
And I would say that driving this is the fact that what was announced on April 2nd was many magnitudes broader and larger than just about anybody had forecast.
Right.
There's also a decent fundamental economic argument for what's going on here, which is given how much larger this effort has proven to be, you could, under some circumstances, really begin to see some moderation in the U.S. trade deficit. Now, the upside to the very large U.S. trade deficit that Trump administration officials refuse to accept or embrace is that all of those dollars that find their way overseas through U.S. buying imports and typically have been recycled back into U.S. assets. In a world where there's going to be few of those dollars because of a smaller trade deficit,
right,
there's going to be fewer dollars out there to pursue U.S. assets. And U.S. assets, as a result, are going to be less appealing on a global stage.
So it's almost like a logical scenario where if the trade deficit gets smaller, the demand for the dollar is going to get smaller because, the demand for dollars from foreign businesses will decline, right? It's like a kind of a natural follow on.
Exactly.
Yeah.
It is. And I don't think that anybody up to that point really saw that as a possibility. Now, of course, whether the trade deficit really shrinks is anybody's guess. But the initial announcement was one that said they're very serious about shrinking this trade deficit. This is something that they are taking on full on. And if they're successful about it, like we said, that's fewer dollars floating around to chase U.S. treasuries, U.S. stocks, frankly, U.S. FDI. And, that'll be even the slower moving picture.
I mean, kind of a faster moving part of the picture is obviously investors pulling money out of U.S. financial assets. So, European, Asian investors pulling money out of U.S. equities. But that has happened before, right? We saw that after the tech bubble burst in 2000. You sort of saw, it's almost like a kind of a rebalancing. I mean, is that also part of the reason for the dollar's fall?
For sure. And in kind of market jargon, people talk about the word correction.
Mm-hmm.
And that's one explanation for what's going on. And even after a correction, US shares remain historically high. So that for sure is one valid explanation that we're hearing, but there's also definitely a sense that perceptions towards the US has changed because of the direction of policy making and those wishes to reduce the trade deficit.
So Dan, I mean, one question that investors are asking themselves is this a deliberate gamble by Trump to reduce the value of the dollar and restore competitiveness to US industry? Obviously, this the drop in the dollar makes US exports cheaper. So is this a strategy or not?
We don't know. Publicly, they disavow that. Scott Bessent, the Treasury Secretary, has repeatedly said we have a strong dollar policy still. And so they're not backing away from that. Of course, that's one of the world's great truisms. You can't say that you have anything other than a strong dollar policy, or
right.
Then you really do invite the wrath of global markets and selling if that's not your party line. But I think that clearly investors are looking at actions beyond words, and they view these actions as something that doesn't do a whole lot in the current moment. Maybe it's only tactical rather than strategic, but in the current moment, it doesn't do a whole lot to strengthen the dollar's footing on the global stage.
Global demand for the dollar and for treasuries have traditionally enabled America to run up big debts and large budget deficits. It's something that's referred to as America's exorbitant privilege. But a crisis of confidence in the dollar and the US economy generally could shatter that special status and trigger a jump in borrowing costs for the government. Before Trump's tariff announcement on April 2nd, the yield on the 10-year Treasury bond, which is a benchmark upon which trillions of dollars worth of loans are priced, was around 4.15%. It's currently around 4.32%. That's a major swing in the bond market, where moves are measured by the hundredths of a percentage point. And it's putting US Treasury auctions and the budget under a spotlight. Dan explains.
It was very notable in the week after the announcement. We had those 3 critical bond auctions. And the 10-year note in particular was one that everybody was watching for signs of real weakness and for absence of foreign buyers.
Right.
In the end, it was very well bid and very well bid by overseas buyers. Now, whether that was a tactical moment where an instrument had just suddenly gotten 50 basis points way more appealing in the space of 3 days, and however much you want to hold your nose over, further bidding on U.S. assets, that one in that moment was too good to pass up, may well have factored in. I think it will be instructive to watch coming bond auctions.
Okay.
And to see just if that level of participation continues to be evident in the weeks ahead.
Have you ever experienced anything like this before, Dan, where Treasury auctions are so scrutinized?
Not in quite the same context. We've had moments because we have this unique system where we self-inflict pain and consternation upon ourselves every few years because of this thing called the debt ceiling.
Right.
And we've had moments when that comes to a push point where we're all watching, in those cases, usually Treasury bill auctions for signs of failure or weakness because we're getting up to the X date. But that's a very different dynamic than what we were experiencing last week when there were people who were openly talking about whether the 10-year note auction was going to fail. It was never really going to fail. There's never been a failed Treasury auction. But if you had seen the number of bids drop below 2-to-1, which is something we haven't seen since 2001, that would have been concerning. In the end, it didn't come anywhere close to that, but we're going to be watching closely.
And that point you made about the debt ceiling, when we ask folks about the dollar's safe haven status, that is one thing that comes up. Policy making being slow to address high deficits, wrangling in Congress, that's all added to this debate about de-dollarization and foreign investors diversifying away from dollars that's been in place for quite some time already.
Dhara, what's the alternative to the dollar? Well, what are investors moving towards? What are they buying instead?
So that's a good question. So the dollar makes up the bulk of global currency reserves. So if you ask this question, the answer is there isn't an immediate alternative to the dollar. But there are, no doubt, competitors, and one of them is the euro, which makes up roughly 20% of global currency reserves. One argument traditionally has been, well, look, Europe, the Eurozone, doesn't have as deep as liquid markets as the US does. The size of the US outstanding debt, the size of the US bond market essentially is close to $29 trillion. And in the euro area, it's $10 trillion. But things are changing. One noticeable change in the last few weeks has been steps towards fiscal stimulus in Germany. Europe's biggest economy is starting to walk the walk in terms of investing money back into its economy, which has been frail, one way of describing it, for the last couple of years. And that has really, really boosted appetite into Eurozone assets, boosted the euro. And one thing that's really notable is that coming into that Trump tariff announcement in early April, many people had said the rally in the euro was going to be really challenged once we had that tariff news. And what we saw was that euro wasn't challenged. The euro held up well. And that reflected investors kind of saying, not only is US exceptionalism on the wane, but we are seeing big efforts to make Europe great again, and that boosts the euro area's standing as an alternative safe asset.
But I mean, the last thing you want in a global trade war is a rocketing currency, right? Like, so from a European perspective, that makes your exports more expensive. I mean, there's a risk here, isn't there? Because trade wars can quickly morph into currency wars.
Yeah, absolutely. Central bankers and policymakers will also, when you ask them about currency rates, they'll say it's not the level of a currency we look at, it's the speed and the scale. And whether you look at the Swiss franc or the euro, we have seen some pretty big moves in a short space of time. The SNB is considered to be in between a rock and a hard place because of the stronger Swiss franc, which is very much a safe haven currency. That's shot up in the last few weeks. And what that does is add to disinflationary pressures in Switzerland. But if they intervene, there are concerns there that they could be charged with being a currency manipulator, which exacerbates tensions with the US. So There's a lot of things going on in the background that makes it very difficult to unravel.
So where does this end? Like, where? It's a big question. How do these ructions stop? What do investors need to see in order for the dollar to stop sliding?
Fiscal sanity. I think we're certainly at a moment where markets and economists see fiscal policy making as the central area to watch.
Okay.
Certainly, there's some expectations or some optimism that if things got particularly bad, Federal Reserve could step in to provide support. But it's not like the Fed is in a position to go all on stimulative right now, particularly with inflation continuing to prove to be as sticky as it is. So there could be, if we got to a COVID type of moment, really in terms of behavior of liquidity measures in the Treasury market, where it felt that it had to come in with some sort of operation to restore Treasury market liquidity. But were it to do that, it would probably want to limit it and certainly be communicating those limits as aggressively as possible so that it doesn't appear that it is providing some sort of open-ended policy support to still a very unclear set of fiscal policy measures and initiatives.
Is that what investors are telling you too, Dhara?
It's actually a bit more blunt. It's kind of stop the policy uncertainty, that view that policy is one thing one day and another thing the next day on tariffs and especially with China as well, since that's a cause of big market anxiety right now.
A big thank you to Dan, Dhara, and everyone covering markets and economics at Reuters. You can catch their tireless coverage on Reuters.com or the Reuters app. Now, before you go, I have a favour to ask. This pod has been nominated for a Webby Award in 2 categories for our Swiftonomics episode, and there's a public vote to win. If you've enjoyed the pod and you liked that episode, please vote for us before midnight Pacific time on April 17th. I'll put links on where you go to do that in today's pod description. Sound design, music composition, and engineering on this episode was by Josh Summer. Our podcast team includes Kim Vanell, Tara Oakes, Gail Issa, Christopher Walljasper, Jonah Green, David Spencer, and Sharon Reich-Garson. Our executive producer is Leela de Kretzer. Remember, for all your daily news, check out our weekday show, Reuters World News. You can catch it on the Reuters app or wherever you listen to your podcasts.